Mid-year is a great time to take a look at a number of things with regard to your income taxes and overall financial planning. So we want to take a few minutes and go through a few things that you might want to consider here in the middle of the year, because it is in fact
the middle of the year.
The middle of the year. So we're going to go through, I think, 5 broad categories.
Yes,
right?
Maybe our top 5.
Top 5? Yeah. And each of these covers probably an array of very specific items that, depending on your own circumstances, you might want to be thinking about. This isn't going to cover everything.
No.
You may want to be thinking about, but human beings are deadline driven, and when you are not staring down the barrel of a tax deadline or some sort of other financial crunch, year end, that sort of thing, some folks just aren't thinking about these things. So here in the middle of the year, summertime, we thought it would be a good time for a few reminders. So, Top 5, what are we going to start with?
Top 5. We are going to start with income and expenses.
Income and expenses. So when you say income and expenses, obviously halfway through the year, particularly if you are a business owner, you probably want to, if you haven't already done so, reassess where you are in the year versus where you thought you might be, right?
Yeah, I mean, a lot of people set goals at the beginning of the year.
Right.
And so right here in the middle of the year is always a good time to check in and see, are you on track? Are you running behind? Are you ahead of where you thought you would be?
Right, because those things will affect a number of other areas of your financial and tax planning life, some of which we're going to talk about. So I don't want to spoil the other 4 by talking about them. But obviously, cash flow is very important. It's very often of paramount importance. So just looking at your bank account, you probably have a decent idea of how things are going. But to stop, take a look at actual versus budget, if you want to use some accounting terminology. Again, as you said, are you ahead? Are you behind? Are you exactly on track? Being ahead is great, but being ahead may be an indicator that you do need to reassess where you're spending your money, where maybe you're not spending money, where maybe you could. Do your projections need to be tweaked so that you have maybe a better handle on what the next few months are going to look like? So as that does feed into some of the other things that we're going to talk about, let's go to number 2.
Okay. So the second thing would be to review your retirement contributions.
Right.
Depending on what type of retirement plan you have, there are annual contribution limits. And so it's a good idea that, number 1, you're in the right retirement plan vehicle.
Yep.
And that you're on track for making those contributions throughout the year. So this is a good time to stop. Just double check that you are where you thought you would be. Yeah,
and again, talking about cash flow, this is an important part of that. Certainly you want to be spending the right amounts of money on your business. If you are a business owner, planning for retirement is an important part of that. You don't want to neglect that if you can help it. So thinking about that as you go during the year is a good idea. Now, quick question for you. We're talking about, of course, current year, thinking about how you're going during the year. Let's say that I have extended my tax return and I haven't filed it yet.
Yep.
Should you be thinking about whether you made the right contributions for the prior year? And if you didn't, talk about how you still have time to do that.
Yeah, absolutely. So depending, again, on what type of retirement plan you have, some of those due dates and deadlines for making your contribution for the prior year hinge on your tax return filing date and includes the extension to file. So if you filed an extension, you have that additional time to contribute.
Right, so you could play a little bit of catch up, again, depending on your circumstances, the type of plan that you're in. So we've talked about income and expenses. We talked about retirement contributions. I think that the third area that we were going to discuss was going to be reviewing your investment portfolio, right?
Yep.
Which certainly we are not investment managers. We don't play in the market professionally every day, but we know, both from our own personal lives and working with clients, that it has not exactly been an uneventful few months in the market, and last year, of course, was the same. So, mid-year, what should you be thinking about if you're looking at your various investments?
So you'll want to review capital gains or losses, depending on what your portfolio looks like. You're also going to want to review any carryovers you had from a prior year. So, you know, depending on your holdings and what sort of gains or losses you're looking at, you know, if you have some losses being carried forward that you want to use up, you know, again, depending on your portfolio and your goals. It's always something good just to take, just to review. Right.
Thinking about your tax position with regard to your investments is important, but it should never be the sole driver. You never want to trigger a gain before it's time, if you think that's something where a position you need to hold. And you don't want to harvest a loss before it's time either, just for the tax benefit. You do need to think about the economics and the potential play out of those investments, just like you do need to think about the potential tax impact to you, benefit or cost, and understand the limitations that may apply to you. Okay, so that's 3. Number 4, what would we talk about for our 4th area?
Well, this topic sort of covers a variety of things, and some of the things that we've already talked about sort of play into that, and that is tax credits and deductions.
Yep. So tax credits and deductions, well, hang on. Item 1, we talked about income and expenses. Isn't that what we're talking about now, tax credits and deductions?
Well, not exactly. So you think about tax credits that are available, and I'm just going to pick a really simple one, one that we've gotten a lot of questions about this year, just because there are some new incentives. What about this electric vehicle credit? If you're shopping for a car, it's maybe something that you want to think about. And that's really, I mean, it's a really simple example. There are tons of examples. There are a lot of credits out there for a lot of different reasons. But yeah, you want to review if there is something that you are planning to do, a transaction that you're, or a decision that you're going to make anyway. You know, it doesn't hurt to just check around and see, are there any tax credits or incentives available?
Yeah, so again, you never want to make a decision for purely tax purposes, but if you have something that serves a business or personal purpose, something you're looking to pursue anyway, look at a way to do it that could potentially yield a tax benefit. Things, the credits for electric vehicles, that's an easy one. That's one we've heard a lot about. I know that just in advising clients about taking advantage of those credits, I've learned actually probably more about electric vehicles than I wanted to know, just about the vehicles themselves, the various things that are available, features, that sort of thing. So so you know, I joked earlier that well, isn't this the same thing as talking about income and expenses? And it is certainly related, but it is thinking about income and particularly expenses in ways that can, again, provide you potentially some additional tax benefit depending. Tax, again, should never be your sole driver, but it should be a consideration. So we talked about 4 areas. The 5th and final area that I think we're going to talk about today, I think has to do with estimated tax payments. Certainly if you are earning income that is not wage-based, where there's withholding, we've now been through 2 quarters of estimated tax payment requirements for calendar year taxpayers, which most of us are. We've got 3rd and 4th quarters coming up. You need to think about, and again, closely related to income and expenses. How have I been doing? Do I need to play catch up with my estimates? Am I more paid in than maybe I'm going to need to be by the end of the year? But it's not, there's more to it than that, right?
Right. So one thing about estimated tax payments that, you know, always comes to mind and is a great tip, I think, is if you get behind on your estimated tax payments
Mm-hmm.
and you have a payment method where you're having tax withheld, you can, increase your tax withholding for the remainder of the year, because tax withholding is treated as paid in equally throughout the year. So, that's just a little tip. If you review everything and you're
Mm-hmm.
a little bit behind, then it's possible that tax withholding is your friend.
Right. Yeah. Something that is related to that, and it would be really a whole talk of its own, and we've discussed it briefly before.
Mm-hmm.
We are, of course, physically located in Mississippi. We work with clients in a number of different areas, but Mississippi has adopted pretty recently, last year, I believe.
About this time.
About this time,
Mm-hmm.
A pass-through entity election. It's an election that's made at the business level, but it affects individuals. Without going into detail, you should just know that if you do own all or part of a business as a pass-through entity, a partnership or an S corporation, looking at the pass-through entity election could be of benefit to you. And the reason we mention it in conjunction with estimated tax payments, it does impact how you make estimated tax payments to the state. And we specifically mentioned Mississippi, but there actually are analogs to this in a number of other states as well.
Right.
Right? Anything there that I've neglected to mention? Again, we could go into a lot of detail.
Yeah. Just, if you have a pass-through entity, it's something that you definitely want to look into, because although it doesn't change the state taxes that you're paying, it does impact your federal tax calculation.
Right.
So again, we have some other videos that are directly that's the topic. So
Right.
they go into more detail.
Yeah. It can be a fairly complex area, like really pretty much everything we've talked about. So we'll urge anybody watching this video to do what we always urge folks to do, and is talk to your advisor. If you don't have an advisor, find somebody you can trust who has experience and expertise in these areas that can give you good advice. Having good people around you in these areas is very important, so we urge you to do that. If you don't have an advisor or would like to talk to us about any of these topics, please let us know. Now, through clever editing, we may put back at the beginning of the video what we are now going to say at the end of the video, and that's just let you know who we are. This is Jessica Cooley. I'm Mike Carraway. We're Carraway Cooley. We provide advice on these and many other sorts of related and sometimes unrelated topics to individuals and businesses. So if, again, you don't have an advisor or need a new advisor, we would love to visit with you about these or other topics. So with that, are we done?
I think
we're done. So we're going to finish where we started and say it's mid-year. Hope everybody had a great first 6 months and a great Independence Day celebration. And best of luck to everybody through the next 6 months. It will not be that long until we have another video. So with that, we are signing off. Thanks, and have a great day.